Michael Harris, the founder of Cribstone Strategic Macro, joins us down the line. And Michael, it's great to have you on the show this December morning. I want to start off with a Brexit discussion. And one of the things that we've talked a lot about on this show is the deep discount that UK assets are trading at versus European and US equivalents. And here I'm not just talking about stock markets, I'm talking about the pound possibly still being undervalued or underowned versus other currency pairs. How do you think about the investment landscape in 2021 in the UK? And now that the deal is over the line, are you tempted to jump in?
Well, no, I think absolutely. And I've been, just from a personal perspective, definitely jumping in very, very aggressively. And that's on the view that, one, we had to have a deal. It was clear that politically there would be a disaster, but the market wasn't ready for that. The market needed to actually see it because of all the bravado and the negotiating stance. So what we've removed here is uncertainty that has lingered over a pretty powerful economy with a lot of potential economic mojo that has been weighing on this market for many, many years. So to think that we're going to see the market move in the pound, in equities, happen and occur in a relatively short period of time after so many years of uncertainty, I think is wrong. I think basically we are going to have a prolonged period of repositioning because the UK is effectively open again. You may not like the deal. You may think that the UK sacrificed a lot to get here, and they did. The finance sector and the city probably have. But ultimately, businesses can invest again with clarity on what is happening, and that is going to be quite powerful. So I would be very, very surprised if this is not a year where the pound is one of the biggest performers amongst global currencies.
Well, actually, to your point, they already see the pound going.
Well, I think, I probably one of the worst calls I made, but I think the spirit of it was there. This time last year, I was talking 165.
Okay.
And my view is the market should understand that a no deal is absolutely impossible. What's the point of signing a transition? So we've waited this year effectively in a holding pattern on the currency. We start the year not too much better than where we started last year. And I think that sentiment is still there. 165 is not going to be reached this year, but I think it's not impossible to reach that on an 18 to 36 month view if things play out as I suspect. If the UK is open again for business, which it effectively is, I would be really, really surprised if we don't see the pound in an environment where there is so much malaise globally, and there is a strong cyclical and combines with a structural story. Again, we sacrificed a lot, so a lot of people question the structural benefits of this, but you have to keep in mind, Brexit was already baked in. Everyone understood the UK was doing some self-harm, and now we're at a stage where we can at least move forward. So I would be surprised if we don't end up well into the 140s, touching 150 this year, but the longer-term trajectory, I think, is extremely bullish.